Hi, this is Jeff from SimpleForexSystem.net, and this is a follow-up video to one that I released, last Friday, I believe it was. And Hi, this is Jeff from SimpleForexSystem.net, and in this video we're going to do a little follow-up to a video that I released about 10 days ago on the buy-sell trend indicator. It was a fairly long video. It's about 16 minutes long, but I think it was worth every minute for those of you that bothered to go through and watch it. And I know some of you actually have picked up the indicator. And those of you that picked up the indicator, some of you sent me some questions over the last few days. A lot of it was, personal to you. It wasn't really subject of a good group type question, but there were a couple of things that came up that I think probably deserve being covered in a group fashion, and so I decided to make this second video. Now, in the just below this video, in the details section, you're going to find a link to the first video. So if you have not seen that first video, you can go back and take a look at it. There's also a link where you can pick up the indicator, and it is an affiliate link. So if you pick it up using that link, I'm going to make a couple of bucks off of it. And below that is also a link to my Renko package, because a lot of you, surprisingly enough, did not understand what Renko charting was. I'm a little surprised by that, but this was your first exposure to it. So let me take a couple of quick minutes here and just explain to you what Renko charting is, and then we'll get into the meat of the indicator questions. Renko charting is a way of charting price action in terms of pips moved, as opposed to charting it in terms of time. Your standard platform has time-based charts, 1 minute, 5 minute, 15, 30, 60, 240, and whatever, about 1440, I guess, for a daily chart, minutes in a daily chart. Renko charts based on price action alone. Now, what you're looking at here are 10 pip box charts, and you can adjust the pip size to whatever you want. But as I mentioned in the video, I tested this indicator out on a variety of pip sizes, and what I found was when I got to 10 pips, which is actually fairly large, this thing really worked like a champ. And so I decided to go with the 10 pip boxes. Now, we'll use this segment right in here as by way of example. Price closed on this particular box. If you move to the candle, you get the little details box. So at 1327, which would have been 6:27 in the morning, the box opened, and it opened at 146.80. And it moved up 10 pips and closed at 146.90. Okay, so now from here, if price closes another 10 pips up at 147.000, a new blue box will form. If it moves down from the low of 146.80 down to 146.70, a red box will form. Well, as we can see, price moved up another 10 pips, and at what that would be 6:34 in the morning, so about a half hour. What was that? A little more than a half hour? Oh, about an hour later, actually. No, I'm sorry. Take that back. That's 6:27. So at 6:34, which would be what, 7 minutes later, price had moved up another 10 pips and closed at 147.000. So we got the blue box. Now from here, price moved down from the low, which was 146.90. It moved down to 146.80, and we got a red box to close. So it's 10 pips down from the low or 10 pips up from the high of that box. You get either a blue box or a red box. What this does is it eliminates a lot of the noise and clutter off of your other charts. If you're using, even if you're using a 1 hour chart, you can run into time frames where volume drops down and there's no real activity, and you have multiple small candles, a lot of dojis, and each time a candle is formed, your indicators have to take the high and the low and the median price and whatever other information they use to calculate, and they have to keep plotting your indicator out on the chart. This can lead to a lot of false signals, highs and lows, or not highs and lows, but buys and sells rather. And in the meantime, price isn't doing anything. And if you're wise, you look at the chart and realize that you're not getting the price action you want. You shouldn't be taking trades, regardless of what your indicators are telling you. Well, with Renko, you don't have that. You only get a new box to form when prices moved X number of pips. And so really you get a much cleaner environment for indicators to work, and most indicators work better on Renko charts. That's what most people find once they start using them. So you just have to kind of break out of the time frame mindset and just realize you're only trading for pips, not for time. and then learn to trade accordingly. Now, like I said, there's a link down in the information below this video. If you want to go visit my website, simpleforexsystem.net, we have an entire package of material, including Renko indicator that helps you chart like this, video training on how to set it up, and it's very reasonably priced. So if you want to learn more, I would suggest you go there. Now, a question that came in a lot, because we had started out very, very well with this indicator. This is Friday. Okay, this is the previous Friday. This is what, 10 days ago, 11 days ago. This is when I send out the initial email letting everybody on my list know that I had created this new video. A lot of people bought over the course of the weekend. Then when the markets opened on Sunday night, price basically gave a buy signal almost immediately using 10-pip boxes. And I had already created the video. I told everybody to use a 10-pip box. What happened was over the next 8 hours, price moved up 100 pips. I've got several people who said that they more than paid for this indicator just off this one trade. You know, so I mean, they're very happy. But then what happened was on Tuesday and Wednesday, and well, starting into Thursday, the first half of Thursday, everything started grinding down into a tighter and tighter range, and the indicator started giving off signals that essentially really didn't go anywhere. I mean, you got a nice, kind of a nice buy signal here if you could ride a 30-pip drawdown, 40-pip drawdown actually. Ultimately moved up into about 30 pips profit, plus you had some re-entry points here. These are the little blue arrows, and they're little red arrows in the case of a sell trade. There's one right down there. So I mean, had you done re-entries, you would have made actually done very well on this trade. You probably would have cleared more than 100 pips on it. But things just kept getting tighter and tighter and tighter and tighter. Well, what was going on was right here in the middle of this very small time frame. This is a 24-hour time frame, by the way. It represents Wednesday from close at 5 p.m. on Tuesday to the close at 5 p.m. on Wednesday. The U.S. Federal Reserve released their Fed funds rate. And leading up to that, traders essentially just tightened up and they quit trading because they were terrified to take a position, take a stand until they knew what the Fed was going to do, even though about 97% of us knew that they were going to raise the rates to 2%. And in fact, once they raised the rates to 2%, which occurred somewhere in here, the market just did not really react. I mean, the price stayed within that very same range until we got to right before New York open on Thursday morning. And price took off. This is 7:57 in the morning Eastern time, and at the bottom of this is at 8:57. So in the course of 1 hour, price moved 50 pips and broke out of the range that it was in. And actually, Thursday ended up being a relatively good trading day. We got a couple of re-entry signals off of that as well. If you had held on all the way until you got a reversal buy signal, you could have gotten, you know, well, essentially the same 50 pips, but you could have also picked up another 50, you know, on the way down. So knowing when there is big news, and Fed funds rate is big news, non-farm payroll has always been big news. Lately it has not performed well at all, but you still need to pay attention to it, because what happens is leading up to that report, the markets tighten up. See, the indicators do not cause price action. They just react to price action. It's traders, it's buyers and sellers that create the price action. And when they're all nervous because there's a major news event on the horizon, none of them want to trade, liquidity drives up, the volatility drives up, the price action or the highs and lows tend to tighten up. You set a series of, you know, lower highs and higher lows, as you can see here. It just becomes harder and harder to trade. So, you know what's going on out there news-wise and react accordingly. And by react accordingly, what I mean is don't trade or adjust your expectations on the trade, and maybe locate where the highs and lows of the ranges are. Sell at the top, buy at the bottom. You know, ignore everything else you see, because most of your indicators, as they tighten up, are not going to work very well. And so you need to understand that. I'm not talking about just this indicator. Any indicator is going to perform more poorly as price action tightens up and your highs and lows begin to start creeping towards each other. So keep that in mind. Now, there was a question about, how does this look on time-based charts? So I'm going to pause the video for a minute. I'm going to bring up a time-based chart. I'm going to show it to you, and then we'll look at some of the other pairs. So we'll be right back. Okay, this is the 1 hour chart, and it 1 hour chart really most closely tracks what you would see on a 10 pip Renko chart, and I'll show you what I mean by that. You'll notice we had a price that kind of moved up, down, went up a little bit higher, then it shot down. We had a little bit of a retrace, and then it came down, you know, pretty much the rest of the day. Well, let's take a look at what happened on the same time frame for the Renko chart. Price moved up, retraced a little bit, moved back up, then it shot all the way down, a little bit of a retrace, and then all the way back down again. So I mean, essentially it was the same type of price action that you saw here on the 1 hour chart, but you don't have all this clutter in the middle. A lot of dojis, a lot of wicks, a lot of, you know, stuff that a lot of people actually rely on to decide whether they should be buying or selling. And in this case, they're getting a lot of bad information. So, you know, it's the time-based charts are just a little more cluttered and a little bit more difficult to pay attention to. And if you'll draw your attention over here prior to Thursday, you'll notice that using the large candles as our entry signals, we had a large red candle that told us to sell down here at the bottom. I think price went another 4 pips before it reversed and came into a buy signal, which we would have bought at the very top of that move, and then price reversed again and went down about, I don't know, 20 or 30 pips before we got another sell signal. And that one went down at least about 10 or 15 pips before it moved back into a range and remained there for a while, ultimately coming down maybe 30 or 40 tops before it reversed and went back the other direction. This is the problem with the time-based charts, is that, like I said, every hour, every time segment that passes, the indicator is forced to calculate new numbers, and in doing so, a lot of times will put out multiple signals that really don't go anywhere, and they can just chop you to small pieces before, you know, you really realize what's been happening to your charts. So that's why I really don't like using the time-based charts, especially with indicators like this. Now, if you come to a 15-minute chart, it's a little bit better, although you're still getting, you know, buy signals that take forever to go off. This was a nice sell signal here, actually. Actually, on June 13th, you could have used the 15-minute chart and made some pips off of it. So that's not really telling me about. But then you come back over here onto the 14th, which was Friday, and you're getting, you know, multiple signals that are basically going the wrong direction. Now you see you're getting a buy signal here, followed by a sell signal that you know, basically would have been a loss for you, followed by another buy signal, which you would not have gotten if the price had moved all the way to the very top. And then again, you get another sell signal on here that actually kind of sort of worked out a little bit, but you're missing out on a whole lot. Now this brings me to a point I wanted to make earlier on the 1 hour chart, and I kind of forgot, so let's make it real quick here. Look at your sell signal right here. This sell signal is this is a 7 o'clock candle. You don't get the signal until the candle closes at 8 o'clock. Now what's happened between 7 and 8 o'clock is prices move 50 pips. Remember what we saw earlier on this? You got the 10 pip signal at 7:57 that morning. That was your sell signal, and you bottomed out here an hour later, 50 pips ahead. So on the Renko chart, that would have been a legitimate signal you could take. On the 1 hour chart, you didn't get the signal until the 50 pips had already moved. In fact, had you bought here, you would have ridden it back about 40 pips the wrong direction before it came back to break even, where it remained almost the rest of the entire session before finally moving down, I don't know, 20 pips or so. So this is why I don't really like the time-based charts, and I prefer to use Renko. So that pretty much tells a tale. So we're kind of running out of time here, so very briefly I'm going to pop up a few other charts, take a look at them real quickly, and so you can see that it works with other pairs besides the pound yen, and then we'll wrap this video up. Okay, this is the euro dollar. Again, these are 10 pip charts. All of these charts are going to be 10 pip charts, just so you know. That, like I said, that is the box setting that I found works out the best. Similar to what the situation we had with the pound yen, first thing Monday, right after the markets opened, we got a little signal to buy here. We got a reentry signal down here, and that reentry signal actually came in when this box closed. So had you bought here, you could have picked up 30 on this one. You would have been maybe 10 pips in profit on the other one, but now you're looking at 40 pips, you know, on that day. A couple of, you know, this is the choppy Tuesday we were talking about. leading into the Fed funds rate. Now, this is where the Fed funds rate came out, and this is the euro dollar. Since the dollar is involved in this transaction with the Fed funds rate coming out, you actually got a nice buy signal here, and you could have ridden that out to 50, 60 pips. Then Thursday, we got a nice sell signal, obviously. I forget, I calculated this once before. I think this ended up going, what did we say this was? Well, it's this way. The close was at 1780, and you bottomed out down here at 1550, so 230 pips. Real nice little signal. Then Friday was sort of a crappy day. Today was sort of a crappy day. Again, anytime you have a big move like this, you're going to follow it up with a couple of days with very minimal trading. So, no surprise. But the euro dollar is actually a good one to trade. So let's go take a look at another one. This is a gold chart. You can see from the indicators that we had, a minor signal that basically went up about 10 pips and collapsed. So we had a nice buy signal. This is on the Monday after I had recommended. This is the Friday here when I did the first video. Buy trade that worked out quite well. Another sell trade worked out quite well. Got a little choppy in here on the 13th, and this was pre-Fed funds trading. And again, if you're, like I said, if you're paying attention to the news, not to be trading before the Fed releases their information, because it's just choppy and there's not a whole lot you can do with it. But you got a real nice buy signal right here at around 1297, 1298, I guess it was. And you can see it just kept going and going and going and going well into Thursday. Followed up with a nice sell signal. Friday, the bottom fell out of gold. You'd cracked over 1300 again, and then fell all the way down to 1275. That's 250 pips, almost 300 pips, I think, on that move. And today was just choppy and not much happened, because again, it's following up after a really big day, and that generally is how things work with trading in Forex. So let's go take a look at another one. Okay, the last one we're going to look at is the dollar CAD. And the reason I want to look at this one is this one has been a really good mover lately. Surprisingly enough, that signals that we've been getting on this one have been traveling 30 or 40 pips just about every time. And I'm a 20 pip trader. I get 20 pips. I generally close out my trade and I call it good. I'm happy with 20. And that's been very easy to get with the dollar CAD. Now, you don't get the full $1, $10 payoff per pip like you would with the euro dollar or the pound dollar, but you can easily pick up 30 or 40 pips and more than make up for what you're losing in the dollar value on the pips. But okay, on the 11th, you can see that, nice little 30 pip move right there, followed by a re-entry that went up actually about 50 or 60 by the time it was said and done. So if you followed the buy and re-enter plan that they talk about with this pair, sort of carried you all the way through Tuesday. A nice little peak there. Where you get out is up to you, but if you're up 50, 60 pips on a trade, there's absolutely no reason to ride it all the way back down to zero waiting for another signal to come out. You should be locking in at least 20 or 30 pips in profit. A nice little sell signal. It went down 30, ultimately came back up. So again, if you're up 30, you're not, if you're going to ride it back to zero, don't go any farther than zero. In other words, don't open yourself up to a loss. You could have taken another 30 upside down before you got the buy signal here. There's no sense in that. I mean, if you're up 30, at least put a stop loss in and lock yourself in at break even. But another buy signal went up about 30 pips. We had another sell signal, went down about 30 pips. Then we had the this actually was Fed funds rate on Wednesday. This is the Thursday trade. You can see obviously at 10 pips a box, this has gone up like 200 something pips, I think. 29.90. It went up to, well, we're at 3,200 here, so yeah, 200 and some odd pips. This has been a very good mover, and I think it's probably worth trading if you want to have multiple pairs up. You don't want to just focus on any one. So anyway, that's hopefully we've covered a lot of the questions, a lot of the similar questions I got out of this. The link for the other video, like I said below, is below this video, as well as a link to pick up the indicator, and also a link to check out the Renko package I've got on my own site. So hopefully this has been enlightening. Maybe you picked up something, or maybe it reaffirmed something that you needed reaffirmed. Hopefully it worked out for you. Thanks for watching, and we'll be back again soon with another video.